Hello everyone, I've been asked by some new members to go over the H4 and daily time frame rules for high-low trading, and they're both the same for H4 and daily. So we're looking at the current pound dollar H4 here, and I'm just going to recap the basic rules now. Okay, so what we're trying to do is, well, there's two ways to play this. You can just trade the high and low trades, okay, of the week if we're using H4. So you can see we've got our week marked out here, okay, or you can trade the high-low trades and the reverse trades. Okay, so the first one I'm going to do is just if you're going to just trade the high and low of the week. Okay, so when we start the week, the first bar of the week is the high and the low of the week. So on the first bar, we're going to just take the breakout in the direction. So you can see this first bar closes up. We'd set a pending over the high and look for an entry on the next bar, and we got that. So on our first bar here, we've secured the low of the week. Okay, so then we're looking for a new high to form, price to close down and break out, and you can see here 2 bars later we get that. So then we've got a hedge, we've secured the high and the low of the week. Okay, and then you can see price comes down and stops out the low, and we're just holding the short. Okay, so now we're looking for price to make a new low for the week, close up and then break out. Okay, you see we get 2 closes up here, but we don't break out of the high, and so we continue down. We don't get a breakout here, and price continues all the way down, and then we get a low and a breakout here. So at this point we're hedged again with the high and the low of the week. Okay, and then price continues down and stops out this low as well. So we end the week just holding the high. Okay, and then we repeat that process the next week. So this week we would have taken the long from the low, and then we would have taken the short from the high. Okay, and sometimes the first bar won't break out. If the next one continues to close down and we break out, we take that. So we're just trying to secure the swing points of the week. Okay, and then this low has been stopped out, so we'd currently be holding these 2 shorts down here. Okay, so that's the technique for securing the high and the low of the week if you're just going to trade the high and low of the week. Okay, and then for exits, you have obviously a few options with exits, and what I tend to do is, if I've got the high of the week, okay, I'm not going to manage this position, okay, until I get a low of the week trade set up and it enter. Okay, so that doesn't happen until here. Okay, we get a few attempted entries here, but no, we didn't get entered into a trade. When this happens here, then you have 3 options. Okay, you either manage your position by moving your stop to break even or locking in some profit. Okay, or you can move your take profit right up to the entry line here and close out your short. So essentially we're only managing or exiting our position from the high when we get a valid low trigger, and vice versa for lows. Okay, that's one option. The second option is to try and stack your trades. Okay, so in that instance, I'm looking for at least 2 shorts before I exit my positions, or 2 longs. Okay, so you see, if we were trading these last 2 weeks, we'd have this would be our second position and this would be our first position. So if we got a long set up now I would look to manage my position, and the same rules apply then, but now I have 2 positions to consider. So I mean, I could close out position 1 completely for profit and move my stop on position 2. I could close out both, this is where we need to make a judgment call and decide what we're going to do. Okay, there's no right or best way to answer that question. It's something that you kind of need to learn and sort of develop your own style of managing the positions. Okay, so that's the basics of just trading the high and low, and the next thing I'm going to do is show you how we trade with all of the reversal trades as well. Okay, so in this instance we're flowing from breakouts long to breakouts short, and we're using that as a way of stacking our trades. So if I went through this sequence last week, we would have taken this long here, okay, and then we get a high short here, okay, and now we have a hedge, and then when price turns around again here, okay, we're looking to long again, okay, but it doesn't trigger, and then we turn short and we'd add a position here. Okay, so now we have two shorts, and our one long has been stopped out, okay, by this spike down here. Okay, and then we'd continue. So now we'd be looking for a long setup. Here comes the long setup, it doesn't trigger, and then we turn short again. Okay, so then we'd add a short here, okay, close down, break out on the next bar. So now we have three shorts running, and then again we're looking for a change of direction. It comes, but there's no trigger, and then we go short again. So now we'd have four shorts running. Okay, then we turn long, and we do get a breakout this time, so we'd have four shorts and one long running, and then we turn short again, and we take the short, and then this short got stopped out, this long got stopped out, and you would be down here with four shorts running. Okay, this is a more aggressive way of trading. The potential risk is much greater, but at the same time so is the potential profit. Okay, and that's a theme that you'll find running through all of my trading is you need to make a decision on how much risk you want to make and how much profit you want to make, and the two are connected. If you look to make money quicker, then you're also going to have a much more risk as well. It's in my opinion, it's impossible to separate the two. They're kind of they're joined at the hip, if you like. Okay, with this more aggressive way of stacking, which I do use on H1 as well. Okay, again, your choice about when to manage your positions, okay, because you don't have to stack all week. Okay, you could have got to your third short here, and when you have a close up, you can think, okay, I'm going to take some profit off the table and close these two shorts, or close all three of them. Okay, or just move the stops up on three of them. Okay, generally what I like to do is look for price to close against, but at the same time I'm flexible on that. If we look at the current week, let's say I went long here, okay, then price closed down and I went short, okay, and price broke down nicely there. There's no reason I can't just take this loss, take this profit off the table, and then start again. Okay, so then sort of looking for a long from here. So as you see with this, we're flowing with price. Every time price changes in direction, we're looking for a breakout. Okay, and then it changes direction again, we're looking for a breakout. Okay, which is the best to trade? I mean, that it really is a personal thing. One requires more time, and they both sort of give you different psychological pressures when you're trading them. Obviously, when price moves, when we have a nice range between the high and the low of the week, there is good potential to make profit, even if price goes down and all the way back up. Okay, the weeks where you're going to struggle are the weeks where we stay in a narrow range, and the range from low to high is narrow. Okay, so on these weeks we lose, and on weeks like this we win. And over a period, our average, the sum of our average winners is hopefully bigger than the sum of our average losers. What I think is important is we're not using any analysis on the entry. We're just taking the opportunities and flowing with price, and then trying to make the best from those opportunities. So that's kind of a quick recap. If you are new, hopefully that makes it clear. And at the end of the week, I will do like a recap on the current week's H4, if that helps. One final point that is important is that you are going to, when we're trading on the H1 time frame, we have this Asian session where we're asleep. Okay, for some reason my lines don't show up on H4, but if I just draw the Asian sessions here, okay, and then this next one didn't show for some reason. So on H1 we have these periods where we sleep. Obviously you can't trade 24 hours a day on H4. This is my this is my midnight to 4 a.m. candle, and this is my 4 a.m. to 8 a.m. candle. So when I trade H4, I always miss this bar and this bar forming because that's when I'm sleeping. But when I get up at 8 a.m. at London Open, I just trade this bar, so I just ignore this bar here. Okay, now your instant reaction is going to be that is significant, that you're missing that one bar, and I promise you, over a series of a long enough series of trades, it cuts both ways. Sometimes it's advantageous to miss those bars, and sometimes it's not. Okay, what I tend to find now is that they tend to be the smallest bars of the week. Okay, so this is when there is the least movement on the charts. So I'm talking about the pound dollar and the euro dollar now, because that is the Asian session. And as we know from looking at the H1, the volume comes in the London and New York sessions on those pairs. So I hope that helps. If there's anything you need me to go over, I'm more than happy just to do some more videos, and or you can ask me questions directly on Facebook, or just private message me from the forum. I'm going to do a H1 recap video as well. I might wait another day and do the first 3 days of the week. So yeah, comments below. Thanks for watching.